There's so many changes happening with new executive orders, the housing market, and it remains to be seen what is actually going to happen. But Mike Simonsen, the founder of Altos Research, spoke with me today about the forecast for the 2025 housing market, how immigration and some of the tariffs could potentially impact the market, and much more in this enlightening podcast. So enjoy. Mike, welcome to the Real Trending podcast. Thanks for coming on.
Uh, Great to be here, Tracey. I think this is my first time on the Real Trending podcast.
Yeah, well, I think you did one. It's been years.
Yeah,
So I think when Altos first became part of HousingWire. So we've been working a lot together on research reports for HousingWire. And one of the most recent one was a housing market forecast that you and Logan Matashami put together. And so I kind of wanted to go over that because even though we released it less than a month ago, I feel like so much has kind of happened since then. And so I wanted to talk to you a little bit about some of those predictions and where they sit right now. So we could first start with like home prices and home sales. You said that they would grow in 2025 by about 5%. Do you really still feel like that's a realistic goal? What are you thinking as far as home sales go?
Yeah, and it's important to make the distinction. There are two vectors, two forecasts. There's home prices and there's home sales. Consumers care about the prices. The industry, we care about the number of transactions, home sales. And so let's start with a sales number. So that was the 5% gain.
Right.
We've had in the now 3 years post-pandemic market where rates started rising 3 years ago. We went from a ton of home sales, like 6 million a year, all the way down to like 4 million. They fell down to 4 million in 2023. They stayed at 4 million in 2024. We saw like very little gains, except until the fourth quarter, where we could start to see year over year sales gains in terms of total number of transactions. Maybe 5, 6, 7, 8% in a given week over the year prior. So that was 24 over 23 in the fourth quarter. And at about that time when we did our forecast paper, it makes sense to me that we would see some continued sales growth for 2025. We could see things like there didn't seem to be any catalyst for mortgage rates to drop super low, which would make a boom market like during the pandemic. But we can see that slightly more sales. We're used to being rates in the sixes. And so we were forecasting you go from 4 million to 4.2 million for 2025. Not a lot of growth, but a little bit of growth. And in fact, when you look over many years, it's pretty rare for home sales to grow more than like 8%, and like an 8% increase in the number of sales in a given year. That's a big year. And there wasn't really any catalyst for it, except, like it's just been really low for a long time. So we were expecting some home sales to grow. So 4.2 million is the forecast for sales for 2025. So then, in the now 2 months, I guess it was December and January, since we've released that, mortgage rates jumped over 7%. And as they did, then suddenly we can actually see the home sales gains we saw in the fourth quarter have kind of evaporated. And so this week, where we're recording this Friday, January 24th, last week's data, we recorded 10% fewer home sales pending, new sales pending. So contracts started 10% fewer than the same week a year ago. So suddenly those sales gains they've kind of evaporated, and it's really, we've had now almost 2 months of mortgage rates over 7%. And so you can see it in that. Our forecast remains plus 5% for the year. And, during a year, you're going to get some months when sales are better and some months where they're down. We're starting in a little bit of a hole, and, I'm still hopeful, and, and anticipate that we will still get some growth during the year. So some of the months will get a little better than expected. Some months are worse. We're starting in a hole. But now, if we move to March or February and then into March, and let's say mortgage rates haven't eased back down again, I expect that in that time we will probably have to revisit that forecast and say maybe the sales volume isn't going to materialize. It's not there yet, but we're starting. We took a step backwards to start the year.
Yeah, well, let's hope that we can continue on with at least a 5% growth in home sales. So let's talk about home prices. What was your forecast, and how are you feeling about that forecast today?
So the forecast is that we would get about 3.5% price gains nationally for 2025 over the year. And 3.5%, we get there because if you look over the long-term history of the country, 50 years or more, it's actually pretty normal to have about a 5% gain in a given year for home prices. And that's typically because we have a generally growing economies, we have generally growing population, we generally underbuild. All these things kind of conspire to make home prices go up 5% or so in a given year. There's only a handful of years when home prices fell in the year, right? In a year. So most years home prices they gain by about 5%. So then we're looking at 2025 at 3.5%. So what that really means is we're underperforming on home prices this year. And we're underperforming that long-term trend because we have an affordability challenge. Home prices are very high after the pandemic. We have an affordability challenge with mortgage rates. There's no signal in mortgage rates that they're going to come down. We don't have anything in the data that shows home prices tanking or dropping nationally by a lot, but they're pretty close to flat and flat year over year. So in a normal year, home prices go up, and right now they're pretty close to flat. So it's a weaker than normal market. And so in like the home sales numbers, the prices are coming in a little weaker than you might expect for January, which would mean like it's sort of a underperforming on that price forecast as well for the year. When right now in the middle of January, home prices, depending on how you measure them, but let's look at for example, those new pendings each week. So you look at the homes that go into contract each week, like those are the homes that are selling. And by watching the median price of those year over year, we can get a trend. And right now it's only like 0.5% higher than a year ago. So home price barely above. And that means there are plenty of markets that are below a year ago. They're priced below a year ago. Some markets are above a year ago. And so nationally, though, we're just about flat from a year ago. And, we'll probably see some gains during the year, unless, of course, mortgage rates stay in the 7s, and that would put downward pressure on prices. So, the forecast for the year is 3.5% gains. And there are some folks who forecast bigger gains than that. Those are people who expect mortgage rates to fall during the year. And if whatever the things conspire that mortgage rates fall during the year, that could indeed spur a lot of buyers who've been sitting on the sidelines and drive prices higher. We don't expect rates to fall like into the 5s, but if it were to happen, then that's how that scenario would get. And there are some housing market forecasters who are expecting that. On the other hand, there are some housing market forecasters who expect home prices to fall this year by 5 or 6% nationally. And that would be the hypothesis behind those forecasts are affordability forecasts. So home prices are really far out of whack from the historical norm in terms of affordability. And in order to get back to the historical norm, one of the things that could happen would be home prices fall and incomes climb. And so now you get a little bit better affordability. So the folks who are leaning into forecasts that say home prices are going to drop. Those are the ones that say affordability matters most, and it's got to correct. Ours is in the middle. We think that the market can stay unaffordable for longer, but there really doesn't see any. I don't see any catalyst handy, and certainly nothing in the data that's driving things higher nationally, substantially higher nationally.
Yeah, I've been seeing more stories of a potential price bubble and, out there from people. So it's interesting. In when you talk about affordability, you'll be speaking at our HousingWire Economic Summit. And I know that you just put out an email with 3 trends to watch. And one of those was affordability. So talk to me a little bit about that and what you see, especially with a new incoming administration.
Yeah, so affordability is the overriding factor in the housing market right now. And the good news on affordability is that we seem to have reached a place where at the national level, we understand that affordability is critical, and it is a supply side challenge. It's not about just giving a tax incentive. It is we have to build more homes so that the cost of homes comes down. So then in the executive orders that were signed the day one of them was homes are too expensive. We need to bring homes down. There wasn't any policy there, but the good news is that it's recognized. And so one of the challenges with affordability in the U.S. is that the crisis happens at a national level, but the control happens at a very local level. And so if we start to get more national recognition, maybe some of the control changes and therefore allows some progress to be made. So, we have yet to see any action there, but it's the good news is that affordability is now really known at a national level, and I think we are starting to coincide on the real causes and the way to get out of it.
Yeah, it should be interesting. I feel like there are a lot of things all coming together, and if you take them separately, like tariffs, immigration, then it's not necessarily the full picture of things, because then you've also got energy. So it's hard to tell what's actually going to happen. Is the drilling going to balance, being energy independent, is that going to balance out the inflation that tariffs might cost? Right. I don't know. I have no idea.
Yeah, and nobody knows because we haven't implemented anything yet.
Yeah.
But I think when you think about affordability as we know affordability, but then some of the policies that we are also expecting are like immigration restriction and deportation, and in the housing industry specifically, a huge number of construction workers are immigrants. It's like 60% in California. And nationally, it's a huge number are immigrants. And many of them are undocumented. So one of my immediate term fears is that even though we're talking about affordability, the fear is that we deport a bunch of the people that can build our way out of it. And I expect that, and this hasn't happened yet, but I expect the implication that we will run into is that it will be harder to build, we'll have less people that can build, and it'll be more expensive to build as a result of a mass deportation policy. It's just that there may be other reasons for doing changing immigration policy, but it is likely to be negative for housing.
And aren't there, I know in farming that there are programs to bring in people from other countries to work temporarily. Is that the same in housing? And is that something that could possibly be balanced out so that, the program is expanded even though they're deporting I don't know.
Yeah,
Yeah.
and you know, nobody know like there's no
Hmm.
policy yet.
Yeah.
There is high level, like there
Right.
is messaging,
Hmm.
and so like I would like I'd absolutely be in favor of seasonal worker home
Yeah.
build, like visas for home builders, like
Hmm.
whatever the things to do are. The we have undocumented workers because we don't have the right visa, the ways for them to come in legally and do the work. So I think that there is smart policy that could happen there.
Hmm.
We don't know what
Yeah.
policies are going to happen. Um,
Yeah.
the what we know, like the talk is,
Hmm.
let's get rid of them,
Hmm.
and so that seems likely to be like loom large for the construction of
Yeah.
homes in the country.
Yeah, it'll be interesting because right now, obviously, they're rounding up criminals mostly, and so it'll be interesting how that policy or that executive order continues to evolve as as they make more arrests or deport
Or
more of
deport.
the
Yeah, and
you
we don't
know.
know. Yeah,
So
we don't
yeah,
know.
it's hard to know.
We do know that there are
Hmm.
plenty of undocumented workers who are skilled in the construction trades,
Hmm.
and they get hired because we need
Yeah.
workers to build houses. So it seems like I don't have data on how many
Hmm.
are undocumented,
Yeah.
but there in many of the states, places like Texas and California and Florida, like
Hmm.
the places where we need to build houses, there are a lot of immigrants
Yeah.
workers in those industries.
Yeah.
And
Um.
it's the similar thing is on the tariff side, right?
Yes.
So we know that, and we know that affordability is a challenge, but you know the talk is 25% tariffs,
Hmm.
and that's like everything from Canadian lumber to appliances from Asia. So
Hmm.
it seems like the immediate impact of those policies would be to make it significantly more expensive to build and buy homes.
Hmm.
Whether that's like long-term inflation, whether that's trade wars, like how any of that things are accepted, like we don't know any of the policy. But if they are broad-based, super high taxes, then it will, like everything we do when we build homes is will cost more.
Yeah. I'm not saying there won't be tariffs, but I have finally figured Trump out. And I feel like it's all the art of the deal, right? He throws out these crazy numbers, or we're going to take over Greenland, we're going to do this, we're going to do that. And then that just starts the negotiation for something different, ultimately, that ends up different. And it could be the same with tariffs. Maybe not. I don't know.
Yeah.
And then you've got, with the tariffs, then you've also got his idea of kind of regulations and reducing regulations on home building. So it's really hard to know what the actual effect of any of this will be until we have more concrete information and things have actually started happening. So it's hard to be optimistic. It's hard to be pessimistic because you just don't know.
Yeah, you don't know,
So,
and we
mhm,
don't know, and uh, you know, it's like it's talk about deregulation in air
mhm,
quotes, but then tariffs are big regulations, like
yeah,
and big restrictions, and immigration
yeah,
is big regulation, and
mhm,
so like these are you don't know what gets implemented, you don't know how it gets
mhm,
implemented, but so these are the trends that we need to watch, right? If
yeah,
we suddenly make building supplies and everything we put into a home and the labor for
mhm,
homes significantly more expensive,
mhm,
like what's that going to happen? On the other hand, in the housing market, sometimes people say to me, like, if we remove all these people out of the country, isn't that demand for housing? Isn't that an affordability thing? And one of the places I'm watching are towns like San Antonio, where San Antonio already has significantly more available inventory, significantly weaker home prices. And if we take, population out of a place like San Antonio, the economy falls, we have less productivity, we have fewer people. Like, do we exacerbate, the housing market downturn and therefore affordability improves, maybe we get a lot more inventory in a place like San Antonio. So I'm watching San Antonio as an example market to say what happens next.
Yeah, yeah, absolutely. And so, as far as market bright spots, where are you seeing in your data the markets that are still continuing to do really well around the country?
Well, really well, you can measure by transaction volume or
Mm-hmm.
prices
Mm-hmm.
and inventory. So the big trend in the local markets this year is that the inventory build, the increase. So we have 25% more homes on the market now than we did in January of last year. And most of that build has been in the Sun Belt states across the South. Um, its inventory is much tighter in like the Rust Belt and the Northeast. So places like Chicago or upstate New York or even Connecticut. Connecticut has 70% fewer homes on the market now than they did in 2019. 70% fewer. On the other hand, Tampa has significantly more, or Austin has significantly more than in before the pandemic. And so what's happened is over the past years, decade or more, we've been moving from the north to the south. We've been moving, sell a house in Chicago, we buy in Denver, we buy in Phoenix, or we buy in Texas, we sell in Buffalo, and we buy in Tampa. And in the last 3 years, as rates have climbed, not just mortgage rates, but interest rates in general, we have what we call the great stay economy. We've been staying in place, not just in our houses. So we're selling fewer houses, we're buying fewer houses. We're also staying in our jobs longer. So unemployment is very low, but companies are not hiring very quickly. They're hiring very slowly. And the people who have jobs know it, so they're not quitting their jobs. So, you're much less confident to quit your job in Buffalo to move to Tampa or to Phoenix than you were in previous times. So you're holding on to your house in Buffalo. And, now since you're not selling in Buffalo, now if you graduate college from Buffalo and it's time to buy a house in Buffalo, there's inventory is tight. So home prices in New York and New York State are up over 10% this year. The home prices have climbed, like it's a big price increase year in New York. Home prices in like the Chicago area are up year over year, where in much of the Sun Belt, they're like flat or, ticking down. Places like Austin is down year over year. Home prices are down a little bit. Tampa prices are down a little bit. Miami. Those markets have where we used to move to, since we've slowed that down, inventory is much higher there, demand is weaker. And so the bright spots, the strongest markets in the country are the Northeast markets. Like I think Zillow called Buffalo their top market 2 years in a row. And it like makes sense. It makes it clear in our data as well. Like those are the markets where, there's inventory is barely above the pandemic lows. And, there's natural levels of demand for people buying it. And so that's driving prices higher.
Well, I am originally from Buffalo, so that is nice to hear. And they've also got the Buffalo Bills doing really well right now. So Buffalo is just a bright spot all the way around.
That's right. You did the Buffalo to Florida move.
Yes, did the Buffalo to Florida move.
So right now, fewer people are making that move.
Yeah.
And so inventory in Florida is up and down in Buffalo. In fact, I talked to a friend recently in California who grew up in Buffalo, and he's getting ready to go back to Buffalo to get the house that his mom had ready to sell, because it's like the first time in decades that he's got a good market to sell into. He's like, oh, it's a good time. So I think that actually this year that some of that market imbalance will even out a little bit from people like my friend who are like, wow, it's time to sell in Buffalo because I can finally do so. I had another friend, a colleague that I was talking to who has an investment property outside of Chicago. And he said, that house has not gone up in value in 15 years. And suddenly we had a good year. And so like suddenly we had home price appreciation. And so it was a real shift from the last decade or so.
Yeah, absolutely. So Mike, any last thoughts on opportunities or, the market moving forward?
Well, for the year, we have, when in our forecast document, we talked about mortgage rates, and we expected that mortgage rates would mostly stay in the sixes, but could get over 7 to 7.25. And they did already. Most people who were forecasting rates for the year were expecting to stay under 7 and in the sixes for the year. We thought it was very possible that rates would get over 7, and they did quickly. We also included a scenario in our forecast which allows for, if we get a couple of months of like the right economic news, the bond market eases rates down, and we get compression on the mortgage rate spreads between the 10-year bond and the 30-year, that maybe we get a little window where rates dip under 6% in the year. Last year, in September, rates got close to 6. And at that point, we could see a boost in sales. We could see a boost in prices. That scenario is still on the table for this year. We don't know if it'll happen, but there is a, if we get a lucky coincidence of those factors, there could be a little window where rates are back down around 6, maybe dip under 6 this year. There's no scenario where rates get close to 5, 5.5 seems really far away. It would be like big recession. We've got to cut rates everywhere. Like all the things have to cut down. And as of right now, because employment is good and cash is good, like recession doesn't seem to be in the cards. I'm not a recession forecaster per se, but based on what we can see there, it seems like rates will stay, hopefully we, ease back down under 7 into the mid sixes. 6.5% is better than 7.25, but last year we really didn't see it move the needle on home sales very much. But when rates started coming 6.2, 6.1, then suddenly we could see people who had been on the sidelines start to take action. And I think that's in the cards for this year too.
Yeah. And I should note that you can download the 2025 housing market forecast on housingwire.com/research. And it is there to be downloaded, and we'll be updating that quarterly as well. And also Mike does an article every week that is published on housingwire.com that is a housing market tracking where we track home sales, home prices, inventory, price reductions, a whole lot of data that is really interesting. So check for that. Yeah. So thanks, Mike. I really appreciate you joining RealTrending.
You bet, Tracey.